So, this week I got talking to some of my friends about bank accounts, and it was interesting. But in the conversation, I realized and I noticed that some people are not aware about the difference between a checking account and a savings account. And that's what I want us to tackle today. So, if you're new in this platform, my name is Sara Wanyama. Thank you for joining the family. Please subscribe down below. Share this video, like it, and switch on your notification bell so that you can be able to know when I upload and when I upload a video. Thank you so much for the love. Thank you for the messages in my inbox, in my Facebook DM, in my Instagram. Thank you, and I am so glad that people's lives are being changed. And then please help us grow by sharing and talking to people about this video. So if you want to know the difference between a checking and savings account, this is the video. Welcome, and let me give you time to subscribe. So it got me thinking questions that people have been during that conversation. Questions like, what's the difference between a checking and savings account? Have I been losing money if I am in either? What are the benefits, and what are the charges for each one of them? We are getting right into it. So, what's a checking? Let me start here. Your checking account and savings account are two different things with different features. That's why they are different products offered by banks to their clients, because they are different feature. They have different features, and they have different uh, things they are supposed to do for us financially as we move towards our financial goals. So, a checking account is where you put your money when you want easy access of your money. It is where we put our money for our day-to-day activities. And the savings account, from the word savings, is intended to be a tool for investing, and therefore enabling us to grow our money rather than spending it. So let me get this to you and break it down. When uh, me me and you, typical me and you, walk into bank account, we never know, we don't have this knowledge, we have not been taught this knowledge. So when we go to the banks and we meet the beautiful employees there, or bank workers there, we ask them to that we want to open a bank account with them. But what we don't do is, usually we do not ask them the different types of products they offer in terms of accounts, and therefore we end up getting confusing one for the other. So I got to ask one of my friends where they save their money, and he and also a she said they are saving their money into their bank accounts. And then I ask them what's their interest rate, and they do not know. And then I ask them how frequent are they, or how possible are they able to withdraw their money, and they tell me anytime. So, and then I get to tell them that's not a savings account, because a savings account is very different. You cannot be able to just go and withdraw money from a savings account. So let's get into it. What's the difference? Number one, there is unlimited withdrawal and deposits for a checking account. So basically, most of us hold checking accounts and we confuse them with savings accounts. So checking accounts are those accounts that we are able, there is unlimited, there is no limitation. We walk into the bank, we walk into the ATM's booth, and we are able to withdraw money anytime, or we go to the bank account and we can be able to deposit. There is no limitation. But for savings, there is limited transactions in terms of withdrawal. You cannot just withdraw. And most banks have put a limitation of 6 withdrawals, and if you get past that, you are given a penalty, you are charged a fee. So there is limitation in a savings account. Number two, no stroke minimal interest for checking accounts. Checking accounts do not attract interest. Why? Because it is what I am looking for the right word, but there is a lot of transaction daily in those accounts, and therefore they are not able to attract interest. This money, the bank do not use this money to loan or do an investment, because many people use it daily. Like you can just wake up and realize you do not have enough money, and you go to an ATM and withdraw money or transfer money to your M-Pesa, so that you can be able to meet your daily activities. So that's why it cannot attract any interest. But for savings account, attracts interest and hence grows your money. So what do I mean it attracts interest? So when Sarah or you go to save your money in the bank, and you have specifically specified it to be a savings account. So what happens when I keep my 1,000 shillings, when I keep my 2,000, when I keep my 500 shillings there, the bank will take that money and loan it to someone who needs that money, who has come to ask for a loan. And then when that person pays that money back, he pays it with an interest, the cost of borrowing. So the cost of borrowing, and then so for example, my 500 has been given to Gloria, and Gloria returns the money with return the money, having grown it with 50 bob shillings. So it will come back as 550, and therefore that's how savings account get interest. Don't worry, your money is still there when you need it. So it's not like you will not find your money, but it will attract interest. Even if it's small, it still attracts interest. So that's another difference. Number three difference, easy access of money anytime. Checking account, you can be able to easily access your money anytime, even at night, anytime you want your money, it is there. But we remember, we have said it does not attract any interest. So 500 tomorrow, 500 today, 500 tomorrow. Savings account has to transfer, you have to transfer it to your checking account, so that you can be able to access your money. So even when you have a savings account, you need to have that checking account first, so that you can be able to have to transfer your money. So today, if I want my money tomorrow, what I will do is transfer my money to the checking account, then I can be able to withdraw it and therefore access it. Another difference, number four, there are various instruments that checking accounts use to withdraw the money from their account. Number one is the debit card. You can withdraw money from your checking account. The banks provide debit cards where you can withdraw your money. Number two, ATMs. Number three, checkbooks. You can write a check and get access your money. Number four, overdraft usage. What's an overdraft usage? When you do not have money, or your money is depleted in your account, and you still want to purchase money, the bank will still give you money. The bank will still give you money, but that money will be an overdraft. It's money that it has loaned. You do not have any. In essence, that money is not yours. So that's an overdraft usage. And then, yeah, those are four ways that you can be able to access or withdraw money from your checking account. And then on the other hand, savings account, on you can only access money through online internal transaction. That is, as I said earlier, you transfer your money from your savings account to your checking account, then withdraw it. So those are the differences. Then what are the charges that each one of them attract? So charge number one, checking account, non-maintenance of minimum balance. For a checking account, it varies from different banks. There is a minimum that you need to maintain, and if you do not maintain that minimum balance, you attract a fee. Your checking account attracts a fee. Also, for the savings account, non-maintenance of minimum balance will attract a penalty or a fee because you have not maintained that particular balance. Usage of other banks ATM, that's for the checking account, where you are going to withdraw money using another bank ATM. That one attracts a charge for some banks. Then number four, monthly maintenance charges. This account, for checking account, I am talking about checking accounts. This account uh, has a charge of monthly maintenance, because you basically, the bank is keeping money for you, so you will have to pay the bank for keeping money for you. Then overdraft charge, as I said, what's an overdraft? Is when you do not have money, but the bank gives you money anyway to be able to do your purchases, so you will have to pay back that overdraft. For savings account, it does not have a lot of charges. It's just that one for non-maintenance of minimum balance and excessive transactions, where I have said most banks, the standard or the limit of transactions you can make in a savings account are 6 transactions. You can draw 6. Past 6, you you attract a charge or you attract a fee. So there is limited amount of times you can be able to access your money, and when you surpass that limit, you attract a fee. So what are checking accounts for? Mostly you can use checking accounts for your day-to-day activities, like paying your bills, by like receiving your income. Yeah, so those are what we are saying, because we have said a checking account is more transactional than growing your money. It is transactional. In a checking your account, your money is not growing. It is actually losing value, because you are paying for a lot of charges like monthly maintenance and all that. But for savings account, the intention is for growing your money, even as little as the interest may seem. It is for your growing your money. At the end of the day, it receives an interest and therefore grows your money. So what can you do with a savings account in a bank? Store up your emergency fund. Yeah, store up your emergency fund. If you're looking forward to go for a trip with your girls or with your guys or with your family friends or with your wife, then this is a place of where you can save up money to go for a vacation. And then if you one of your financial goals is to get a car next year, then you can save up, because it does not it attracts interest, and your money may not be losing value. Underline the word may not, depending on the interest rate. Again, a savings account, as much as we have said it attract interest, this is not a place to put up your money for long-term financial goals. Like for your retirement, this is not the place to put up your money for your retirement. So many people have a lot of money in their savings account. It's not earning a lot. So if it is for your retirement, that's a long-term financial goal, then that's not the place. But for short-term financial goals, like emergency, growing your emergency fund, like going for a vacation, then that's the place. So thank you so much. I hope it's knowledgeable. Recap, let's just do a recap. A checking account is for our day-to-day you stash up money for our daily activities. A savings account is for growing, it is for the intention of investing. Okay, the difference is checking account has unlimited number of withdrawals and deposits. Savings account, there is limited transactions to it. Checking account does not attract interest, and if it does, it is very very minimal. But a savings account attracts a higher interest than a checking account. Then accessibility of your money, you can access your money anytime for a checking account, but for a savings account there is limitation. You are not able to access money unless you transfer your money to a checking account, and therefore you will be able to withdraw. And then we have said instruments that help you withdraw money, or instruments that the bank provides for you to withdraw money from your checking account is: number one, debit card; number two, ATMs; number three, checkbooks; number four, overdraft usage. For the savings account, it's online internal transactions, where you will, as I said earlier, you will have to transfer your money to your checking account and therefore able to withdraw your savings account. Then we have said charges for checking account: non-maintenance of minimum balance, that is a charge that you will attract; usage of other banks ATMs, that's a charge will attract; monthly maintenance or charges; and also overdraft charges. Those ones are charges that are associated with checking accounts. Savings accounts have non-maintenance of minimal balance and then excessive transactions. So those are the two charges that savings account associated with. And we have said where you can use your checking account is for paying your bills, receiving your income, and for basically day-to-day activities. So you can, what I do myself, once I am paid in my checking account, I transfer all my money except 1 month living or 1 month expenses. So I ensure that my checking account has only for 1 month expenses, but for the other amount I send it to either my savings account or to my money market fund to or invest it in stock. We will talk about all this variety, but that's what I do. And for savings account, what we have said, you can use it to build up your emergency fund, because it limits you access, so you will not be having the urge to dip into your savings. So you can use it for your building up your emergency fund. You can use it for short-term financial goals, like looking forward to buy a car, looking forward to go for a trip or your vacation. So those are the things that you can do. That has been an exciting topic for me. I hope it is for you, and I hope it has impacted your life. You have gained knowledge. If so, please comment down below what you think about a checking account and the savings account, and also a comment of other accounts that we can look at together. Again, please share for other people to learn. This is not common knowledge. Probably you would think it is, but it is not common knowledge. Please share, please like, please leave a comment, and positive vibes only. And also, if you are a banker, I would want you to comment and tell us how banks are working towards giving knowledge or helping their clients know the differences about these two, so that in the future we can be having so many people who are able to know what accounts they are holding. So we hope to grow. When we are coming back, can we be 100 subscribers, please? Thank you, thank you, thank you. Till next time, keep it real, simple, and savvy.